Good morning to all traders and welcome to another Markets and Waves video. Today is the 31st of May, the end of the month. And as you well know, last Friday, which was the last Friday of the month as well, we saw some very interesting moves, some very interesting upsides, or let's just say impulse moves with complete reversions. And that now obviously remains to be seen whether this is the case or not, but we could see those moves continuing, which means we remain adamant at the previous scenarios that we have been analyzing for a while now. Today we're going to have a quick look on the index, the euro dollar, pound dollar, not pound dollar, oil, gold, and the S&P 500. So starting with the DXY, we did say that we wanted to remain below the channel to, remain relevant to the downside. That wasn't really the case. However, our Fibonacci over here at 61.8 did a very good job at holding bulls contained in a bearish downtrend. So that being rejected and prices literally just having managed to get back into the descending base channel, I'm looking at a continuation to the downside, with that being, of course, wave one. Then we're expecting wave two, and then 3, 4, and 5. That's going to be, of course, getting us down there. Now, it could be a case though, instead of 1, this is 1, 2, 3, 4, and we're going to get a 5th wave down. Then we're going to get the correction and then continue to the downside. Or it could be a case where this is 1, 2, 3, then we're going to get an expanded flat or something, either in wave 4 or in wave 2. So this can be treated equally the same way, but we would prefer, because this is like a very monotonous downside move, would prefer to call this as 1, and perhaps we want to get wave 2, and from there continue lower. But now, if we have a quick look here at what we've done so far, we've only corrected 23.6, okay, of this wave 1, which means if we continue lower and we break below the previous low at 89.88 and then 89.85, and then of course 89.50 and 89, that's going to be really a case where this impulsive wave 3 is going to be quite big. That's why the correction to the upside as well is very minimum. Now, do we get anything on the RSI and on the MACD? We do get a signal on the MACD, on the RSI, however nothing, because obviously strength is a bit relatively speaking with momentum, comparing to momentum, strength is obviously here a bit, it's like increasingly speaking, you expect to have more strength than more momentum in moves like this, because they get reversed. So momentum saw a reversal, and now currently we see both the second line as well, the slow line really going for the zero cross as well. Okay. The other scenario we discussed last Friday, guys, it's in case we continue higher, because so far we have 5 impulses up, right? Can be a wave C or can be a wave 1. So we really need to see what's going to happen over here in order to identify whether this is a continuation to the downside, or, as you remember, this is our wave 1 and this is a wave 2 finishing up here, validating that signal and then continue to the upside. So you can understand that the short term is quite critical for the DXY, because that's going to, of course, set the trend or the reversal or whatever for the other currencies as well. Now, euro dollar, we've had a very similar move, but exactly opposite to the DXY. From up here, we've fallen, and right at the 61.8 Fibonacci retracement as well at 121.32. We've done wave 1, and then perhaps 2, 3, 4, and 5. It's a very similar case with the DXY, I don't think there's a reason to go through the same stuff. I just consider the opposite of what we just talked about on the DXY. The only thing I see here differing is that we've come back in the channel quite nicely compared to the DXY, okay? Which means euro dollar currently is a bit more bullish, okay? Because then you compare the DXY still being closer to the channel over here could mean that the pound is weaker, okay? Or that the yen is weaker as well. So it gets a bit more strength because of this. That's why it remains closer to the upside over here. The potential over here, of course, in the short term would be to get back to 122.65 and break it. Otherwise, you know, we could really consolidate around that area, even move back below it. With that being a case where, again, you know, cross 121, then things are going to be changing, and we are going to be bringing back into the game the potential of this being a W, X, and Y, which is going to mean that wave 2 is going to be here, and this is wave A, this is wave B, and this is an ended diagonal in wave C. Now, what does the RSI MACD show is, okay, this signal, and we get a very tiny signal to the upside for the momentum over here with the EMA lines indicating that there is a bias to the upside supporting bulls. Now on oil, you probably remember what we talked about last time about different scenarios and about how my view has changed a little bit over here. I mean, I'm looking at the structure, or not the structure, the labeling and the patterns are over here, I would say. But we did talk about the potential of that, you know, ending over here. We've got 1, 2, 3, 4, and 5. That means that this can be 1 and 2, 3, 4, and 5 for wave C. Or it could be a case where this is going to be correcting, and then we'll get another move to the upside, and it becomes an ending diagonal or something like this. Or it could also be a scenario that I'm very favoring over the past few days since we've had this low in. If you recall, I was looking at this ending up here, and that being the wave C over N diagonal, which means this is a move to the upside, okay? And this is 1, 2, 3, 4, and 5. That's wave 1. Might get correction down here for a double bottom, and from there continue up, okay? So these are the scenarios I'm looking for. The oil, the signals on the downside are what I'm looking currently, and that's why I believe that in either case we're going to have to go down to the 65.20 to be able to get a better projections, pretty much, okay? Because as long as we remain above that level, then, you know, we could continue higher, either for another small leg over here to stop and then reverse, or, you know, continue higher. But should we come down here and we'll do a double correction over here, not a double 4 correction, that'll be actually on a 4 and on the 2, but, you know, because this will be 1 and 2, then that would be easier probably if we get also a signal on the RSI and the MACD to consider forming a wave 1 and a wave 2 over here. Okay, guys. Now on gold, not much signals here apart from this momentum on the RSI and the MACD. You know that we've been looking at this to correct lower for a while. We got this correction in, and now we're moving up. So I'm just not convinced about the correction, because if you compare wave 4 to wave 2, it's very small, lasted very little. Okay, so I want to see, perhaps we might see WX and Y, excuse me. Okay, which means that's going to be ABC, ABC, and ABC, something like that. You know, coming even a bit lower as well would make sense. One, maybe the double 4 here can be seen around 180.70 if we're going to get there. But currently, what I am um, taking into account is the fact that the move to the upside looks impulsive, okay, and that looks like a leading diagonal to me. So that can be either 1 and 2, and we're gonna go 1, 2, 3, 4, 5, and then the 4, and then the 5, and finally complete wave 5 of intermediate wave 1. Or it's going to be a case, guys, well, even if this is a leading diagonal, correct, A, B, and a C. So 1, 2, 3, 4, 5. Could be a case where ABC, ABC, and 1, 2, 3, 4, 5 for expanding flat, 1, 2, 3, 4, 5 for running flat, or even 1, 2, 3, 4, 5 for a normal flat. For now, I will be really paying attention in the short term to this low down here, 1900, which is a very nice handle as well. Should we continue higher and we'll break above that low, the high, sorry, I'll be looking to the next at the 38.2 break, which means very likely prices, could get there, 1924, and from there we'll see what's going to happen. Because if we get 5 ways down, it's going to be running or expanding. If we continue higher, that means that our ABC ended here. This is leading, and then you've got, leading over here, we've got 1 and 2, we've got the 3, the 4, and the 5. That's for gold as well, guys. And now we can go on the S&P. Last week we talked about that potentially being W, X, and Y. And we were looking at the 88.6 to hold, and it's exactly where prices came so far. So that being an A, a B, and that looks like to me 1, 2, 3, 4, and then 1, 2, 3, 4, 5, an ending diagonal that ended. I'm looking now for 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, and perhaps we can get down to that 40, 41. Should, of course, the signals indicate that. Now on the RSI and the MACD, we don't really see signals, okay? We want to see more upside to get a potential RSI, hidden divergence over here. The only thing that really gives us something is the histogram, which means that the distance, of course, between these two EMAs, the slow and the fast one, is decreasing, which is expected. So I will be looking at the 61.8 next, okay, and then of course the 50, and then the 38.2, etc. But should we break below that level over here, that will be an early sign of a potential move to the downside. If not, then most likely we're going to continue higher, okay, which means this is an ABC and finished over here, and this is our wave 1, this is our wave 2, this is an internal one, we're going to get 2, then 3, 4, and 5, for 3, then 4 and 5, okay. So I'll be really looking here at the short term, because the short term is quite important in this scenario as well. Okay, so guys, this will be all for the day. I want to thank you for watching yet another video. If you have any questions, leave a comment on the YouTube section. If you have alternative scenario in mind or any other comments related to technical analysis, please also leave your analysis on the comment so we can have a conversation. So again, thanks for watching, and we'll speak again tomorrow.